Welcome to TradeTheNBI.com. This is John's Reporters for the 4th. And well, what a surprise. We talked about the sideways action off of what we were seeing from the failed step down of the orange. Just indicated that we weren't going to get the uplift as well as we saw the fade of the midterm buyers in green on the DOC here just not click over. So, yeah, just a malaise, but nowhere for price to go down because we're just not seeing any incentive to sell. We're also seeing the shakeout staying positive. So again, now next thing we'll be looking for is another uptick or even the blue to start rising. That would be the next indication of the potential for something to take place. At this particular point, a whole lot of nothing. Same thing on the NASDAQ, whole lot of nothing there. The euro though, that's going to keep buoying the market and could even, well, give it a little bit of a propulsion because as you get closer to a 120, obviously once the grand jury for Mueller was impaneled in that caused the euro to rise again and the dollar to fall. So there's some systemic desire, nothing good going on in the European Union. So some of this could set up a counter trade. We've seen positive extremes from the moment this thing broke out all the way back to the beginning, which would take it all the way back to the 114 range, 110. We're outside the general parameters that we had from before, but once it started to take off, you get the carry through, and that's exactly what we're seeing. But it really helps the S&P because it bolsters the numbers for the next quarter going forward. So there's always a silver lining. And flight to bonds, interesting indication that Fed's going to slow down or whatever. I don't know that that's necessarily the case. It could cause a lot of pain, but I think people are outflowing to get some safety, regardless of yield, which is always an interesting thing to do because you're not going to get anywhere. Oil, we saw the breakup of there above the 13. It was still below the red line. We see that it's finally turning right at the yellow line, so not a terrible shock there. It's had a decent run. It got a little bit ahead of itself. Still, potential that things are ramping up economically, starting to build a little bit. We need another quarter to see if GDP numbers rise. 2.6, if we get into the closer to near 3 or whatever, then I think you would see oil really stabilize at a higher level. And that would be good for adding to the economy as well. So it's a double whammy. And gold, it's going to continue to press higher. I think there's just a lot of demand out there for it, and no reason why it wouldn't continue. We were expecting it to rise after it had that brief decline, gave an opportunity for central governments to fill up their coffers, and it looks like they did that as well. And you can see this flat line. That's just boring as hell. So nothing else I could say about that. We're getting a little reset right now that could break us out into highs. Again, we got to get to that 24.85 range before anything's really going to break free, at least to move towards the 25 at that point. Theoretically, inflows should start coming in, and like I said, we should see a move that breaks us out of this. If we don't, then that would indicate that there's plenty of sellers into new liquidity, and if that's the case, then next week we might see well, some further declines, because that would be just the opposite of what you expect when new money's coming into the situation. So we'll take it one tick at a time. As always, though, trade well. We'll talk on the Skype chat.